going on, everybody? Hopefully you're all having a really fantastic day today. I want to have a quick conversation with you all about funding and business funding in particular. This is what I spend the majority of my day doing, is having these conversations with entrepreneurs about how to get their businesses funded. And it's something that I love to do, but there's always a lot of confusion going on about exactly what you do to get your business funded. And there's several routes that you can take and several conversations that need to be had before the specific option can be told for what's right for you. So I want to go over some of those options today and just give you a brief idea of how it works. The traditional way is typically going to a bank and taking out a loan. Now, this is really difficult to do because startups are usually pretty volatile. And that means it's going to be more difficult for the bank to get their money back or to even make money off of it via the interest that accrues. Because, there's a chance that your business, unfortunately, might not make it and that you might fail in business. That's a reality. And so how are you going to pay that money back if your business isn't working? So, there's some very stringent rules that come along with going and getting a loan from the bank. Now, how do I know most of this? Well, I actually come from a banking background, and I worked in banking for several years, one of the big four banks, then a smaller based community bank, and at both of those roles, I had the opportunity to work along with business banking's, factors, and got a chance to really work with a lot of those entrepreneurs to see the ins and outs of how it worked. Now, outside of that, there's my favorite option, which is obviously crowdfunding. And, how does crowdfunding work? It seems like it might be a difficult idea, but if you understand how GoFundMe works, that is crowdfunding. That's specifically what crowdfunding is. Now, there's a few other crowdfunding platforms out there, including mine, which is Inventrify.com, and they all work pretty much the same with some small variables and factors, such as Kickstarter. Kickstarter is a platform that's more for a solid product or invention idea that maybe you want to validate the market by seeing if people will take pre-orders for your idea. And they will donate money, which then goes towards a pre-order of whatever product you have or invention that you have. Then you make the product and hopefully deliver the product to the consumer. Inventrify, we're a little bit more community-oriented, meaning we focus on the community businesses, the one that are going to have a strong impact within the community that they serve, and hopefully on a wider scale as well as that business scales. And so that's something that we try to really focus on with our platform, Inventrify. So as you can see, they all pretty much work the same with a few differences in between. Next, I want to talk about VC, which is venture capital. And again, this is just very brief. Venture capital is giving up equity, which is a portion of your company, to somebody, and they give you capital for that equity. And that capital will hopefully be infused into your business to help it grow or to start. And VC has always been known to kind of be one of those games where it's not what you know, it's who you know, and hopefully you know some venture capital companies. But if you don't, one way to get to know them, outside of just throwing out cold emails or leads on LinkedIn, is by going to networking events and specifically going through entrepreneurship programs. There's a really great one called the Founder Institute, which I'm now working with a little bit. There's other ones, Y Combinator. When you go through these programs, you have natural introductions to venture capitalists who hopefully will believe in your product, service, or idea and infuse that capital in to help you out. Now, a lot of people always have a problem with, well, I don't want to give up any of my company, etc., etc. Just remember, a lot of a watermelon is better than all of a grape. Just keep that thought in your head as you think about going the VC route. Then there's always the popular bootstrap it, and this is definitely possible, and I always encourage this for people who are trying to start small and take affordable steps in their business, which is very important. And what do I mean by that? Well, if you're going to open up a t-shirt company, you might want to start by making 10 t-shirts, selling those 10 t-shirts, and the profit from that, then you want to reinvest and maybe make 20 t-shirts, then 30 t-shirts, 40, 100 t-shirts, so on and so forth. from the beginning, you don't want to start out by making 1,000 t-shirts and hoping that they will sell, because they might not. There might not be a demand for them. And in that case, well, you're going to be out the money that you spent on those 100 t-shirts, and your wardrobe's going to be kind of plain, because I'm sure you're going to be wearing them yourself or taking them down to Goodwill or something. So to, stop that from happening, you start small, and then you scale your business via affordable steps, which is very important to do. If you guys have any more questions, please like, comment, share, let me know what it is, and I'll see if I can help your business grow and get the funding that you need. Thanks, everybody. Have a fantastic day, and as always, Inventify your world.